Hi everyone, good morning and welcome to today's morning report with me, Rich Perry, market analyst at tack Markets. The European trading session has got off to a bit of a neutral start really. Markets are slightly lower, not too significantly lower, but slightly lower. Just consolidating, I think, some of the huge gains that we saw yesterday. The markets had a pretty tumultuous day yesterday with the bit of a triple whammy actually. You had, first of all, Benoit Coeure of the ECB giving comments that basically drove the quantitative easing trade once again, euro being smashed on the back of that. And then cable was also coming under pressure, sterling being sold off on the back of the deflation dip in the UK. And then also you had some strong data out of the States, so pretty much all round strong for the dollar. And there was, as I said, a move once again lower on these bond yields. Now the German Bund certainly pushed lower, and there has been a continuation of that again today, interestingly. But look at this Treasury yields. 10-year Treasury is not really moving at all. Interestingly enough, actually they're slightly higher than they were yesterday. So that's an interesting dichotomy going on there between Bunds and Treasuries. And the subsequent result is this sharp move higher in the dollar index. Dollar being very strong on the back of all these announcements and data yesterday, and it's continued to a certain extent today. The euro remains under pressure today, although pretty much across the board, other than that, currencies are broadly flat. Very interesting moves being seen on the euro. Now, I'll talk about the euro move in a bit, but certainly this is impacting today. It would also seem that, well, we've got the Bank of England meeting minutes first up this morning. No real change expected there, and in light of the fact that it comes, the meeting was before the quarterly inflation report. The effectiveness of the impact of that on the market could well be reduced. So 9-0 in terms of holding the rates flat is the expectation there, and no real shakes should be coming out of that. But you've got the FOMC minutes tonight, and that is obviously the big focus today. FOMC minutes. The meeting was a little bit mixed actually on the statement, the reaction a few weeks ago that we had, and the market didn't really know how to take the whole statement didn't really get a lot of direction off it, and it'll be interesting to see how the Fed explains the whole transitory comment in terms of how economic data has been so weak, because economic data has been continued to be weak since then. So it'll be interesting to see how that comment affects the markets this evening. Now, in terms of my chart of the day, we've got the DAX, and the DAX has been had a strong move up yesterday. Euro weakness equates to basically DAX strength because of the high exporting element of the DAX, and we saw a big breakout above resistance yesterday. DAX over the past few weeks has been consistently finding resistance underneath this big neckline of this top pattern, this head and shoulders top pattern, and yesterday it broke out above the 11,750 and 11,750 reaction highs, and it broke significantly above that to close well through that resistance, 11,873 there. The interesting move was also seen the fact that the MACD lines have given a cross buy signal now, and the stochastics are also pushing higher positively. RSI just looking to improve as well. So momentum is picking up now on the DAX after these two strong trading days in a row. You've had a lot of volatility in the last few weeks on the DAX, but it seems to be that that's starting to now break higher. Now, if you look on the intraday chart, if it ever loads, if you look on the intraday chart, you've seen here this band of resistance. Actually, this is a big band of resistance consistently. Old support becoming new resistance, and that consistently held it back. Look at the fact that we basically saw the DAX open above the resistance yesterday and sort of held onto that all day, and used the resistance around that. Sorry, the old resistance becoming new support, 11,710. So that's what we need to look out for, and 11,750 was a reaction low as well. We've seen a slight dip back early doors today, and I just think that's just unwinding this to a certain extent, but I think that this could now become I mean, just looking at it from a bigger picture perspective, if this is the big breakdown of the euro, then that would generally tend to see DAX pushing strongly higher again. So that would be, I think, any sort of dip back towards this 11,710, towards sort of that 11,750 area, I think would be probably a chance to buy now, because it certainly looks like the outlook is improving on the daily chart, and also the hourly chart as well has picked up quite strongly in terms of momentum. So I think the fact that we're sort of broken through that, you could even argue that's a small base pattern. You would certainly see in that scenario tests of these reaction highs around 1280, and that's 1250, around about those levels there. So I'd say that these we could well easily see dips being used as buying opportunities now on the DAX. Certainly if the euro continues to weaken and bond yields continue to weaken as well, I think that would push the DAX higher and more back towards these 12,080 resistance levels, and certainly if it broke through those, then you're looking very strong again. So it certainly looks as though the DAX is improving, and at the moment you'd be looking at using dips as your buying opportunities. So I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.